Hey, this is Justin with Day Trade the Markets on Thursday, August 3rd. It's an incredibly slow day of trading today in the E-mini, so I thought rather than force a trade, I would just do a quick video and talk about how to, make sense of the market when it is a very quiet, choppy type of a day. First things first, by law, I got to show this disclaimer. So just don't invest in the futures markets with money that you can't afford to lose, basically, which I would agree. Now, in terms of making sense of what we have today, a couple things just to at the beginning here. Number one, I think this is probably the most important part. You do not have to trade, okay? There is no law that says you always have to be trading just because you're in front of your computer. I know that that's what we kind of feel like when we're at our computer. We're here, we're ready, we want to make money. We're traders, we want to make money trading. So obviously, how do we make money trading? We take trades, and so we're kind of programmed we should be taking trades. What can happen though is on a day like today, if you're not able to identify that it's just a very quiet day and adjust your strategy accordingly, then you can force trades and really put yourself in a bad position, especially if you trade in certain styles. So that's the first and foremost. There's just no law that says you have to take a trade. Okay, some of the best trades you can take are the ones you don't take. In other words, just don't force it is what I'm trying to say. I can talk about that for 10 minutes, but bottom line, just don't force it. Next thing, when the market is quiet, however, number one, you need a way of identifying that it is quiet, first and foremost, okay? You can eyeball it after the fact and say, yeah, it was really quiet, but, what are some other ways you can identify that? I'll talk a little bit about that. And then you need to think point to point. Instead of thinking about a big move, instead of thinking about momentum or the market taking off, you kind of have to you have to know how to identify specific points, and then you have to think point to point. So you're not going for huge trades, you're going for trades from A to B, and then from B to C, and from C to D. If you're going to take trades on a day like today, you can't be trying to take trades from A to Z, if that makes sense, and I hope it does. So if we look at today's market, what I'd like to do is kind of just run it back and kind of go through it almost like bar by bar, box by box, if you will. Just try to make sense of it. The way the way that I look at the market, that I teach it, and what we talk about is we want to look at it on kind of three different levels. Okay, so we have the what I call the box level, okay, evidence, and that is the short term, right now, what's happening in the under the surface of the auction. That's the most recent, most relevant information. I also like to talk about the zone level evidence. Those are kind of intermediate term. It's kind of the support and resistance on slightly bigger picture level. And then I talk about the big picture bias evidence. Okay, and both of the zone and the big picture we define before the day begins. Okay, so if we think about that, going into today, we have a big picture bias of up. That would change if we get below 65 quarter and stay there for a while, what we call acceptance. But as of right now, we're going into the day with an up bias, okay? And then we want to think about the market in terms of what's going on in the zone level and what's going on in the big picture level as well. So let me kind of why don't I just run this thing back and let me make some space on the right side of the chart here. And kind of just let's look at it from the right edge of the trading, almost at the beginning of the day. Let me put a little more space in there. And so let's just kind of think about what we're going to see. So we head into the day here, and we open right in here, okay? And so we have a big picture bias. So our big picture bias is up, and that means that all things considered, we'd rather be long than short, okay? So going into the day, we would rather be long than short. Now, of course, unless sellers are able to prove their strength, and we have different ways of determining if sellers are able to prove their strength. They could stack selling boxes. They could win on the zone level. We talk about this, all the time. But that's the first thing we're thinking about. So then if we want to get long, the next question is how can we get long, okay? And so there are a few ways to do this. One, so again, how do we get long? One, we can get long in an area of what we call zone support. I'll talk about that in a second. Or two, we could get long on buying box evidence. I'll talk about that as well. Or three, we could get long on what we call a rejection or a failure of selling box evidence. So let's kind of break these down one by one, okay? So The first one is we could get long at an area of zone support. So what does that mean? Well, heading into the day, we have this zone, this containment area that's, this pink box, if you will, okay? And the idea here is that if we open in containment, what should happen is, I say should, is that if the market comes up here, it should offer us some resistance there. Just like if it came down to the bottom of the zone, it should offer us support right there. Now, if buyers are strong enough to break through and kind of win at the zone level, then that would show us that buyers are pretty strong on the day, number one. And number two, we would expect this area that was once resistance right in here to kind of flip over and become support, okay? On the the same thing down here, what would once be support down here, if sellers are able to prove that they're strong enough to break through this zone, number one, that's showing that sellers are pretty strong. Number two, then we would expect this area that was once support to flip over and become resistance. So on the zone level then, if we're looking to get long, what would the zone support levels be? They would be the top of the low of the zone right in here, so being a buyer at the low of this zone, or if the buyers were strong enough to break through there, to be a buyer when we retest the high of that zone. That's what this would be, getting long at an area of zone support. So as we open the day here at, let me get rid of some of these things here. Let me get rid of the ellipse and the arrow. As we open the day here, we're not above this to get long on that zone, and we're certainly not all the way down here to get long there. So at least at this moment in time, we don't have we don't have the option of getting long at an area of zone support, okay? So what about if we could get long on buying box evidence, or if we could get long on the rejection or failure of selling box evidence? So let's kind of play it forward here and talk that through and look at that. So the first thing we see is we get this selling box right in here, okay? And what this means, just generically speaking, let me actually draw up here for a second. If we get a box, whether it's a buying box or a selling box, okay, if we get a box, we would just generically expect, this is an area of containment, we would expect the high of that to provide resistance. And if buyers are strong enough to break through there, we would expect that it would flip over and become support. Just like the zone, it's just on a smaller level, okay? If the market comes down to the low of a box, we would expect that to offer us support. And if sellers are strong enough to get through there or buyers are too weak, then we would expect that to flip over and be resistance on that level. So all things equal, when we get a box, that's what we expect. Now, when we get a selling box like we got here, the first thing that we see, we get a selling box, our expectation would be that the high of that should hold. It should give resistance. And then when we get to the low, it should offer some support unless the sellers are strong enough to get through there, in which case it would offer some resistance there, okay? So the first question you would ask is, well, do I want to get short here at the high of that zone? It is certainly an option. I think against the big picture bias, it might not be the most high probability trade. I mean, any trade can work one time, but it might not be the most high probability trade. But what I'm thinking at this moment in time, because again, we'd like to get long until sellers prove that they're strong enough that we need to take them seriously. If we want to get long, one of the ways we can do that is to get long on the rejection or the failure of selling box evidence, okay? So what would rejection of selling box evidence? That would be if the market comes down here, kind of dips its toe below the box and quickly comes back up. That would be considered a rejection of a selling box. This is what we call a fade trade. That can be a pretty good area to go long. Okay, so that's one way. That's a rejection of a selling box. Okay, another way, the failure, what we call as failure of a selling box, would be if the market can start to accept price above the selling box. Then we would expect if it came back down there, that would be a pretty good place to buy it right there. Okay, so those are a couple things, and at this moment in time, all we have is this selling box, so that's kind of what we're looking for, okay? So let's play it forward a little bit, or let's kind of fast forward it. So as we see, the market does come up to the high of this box, decelerates, and does come back down. But so if you took that, great. But otherwise, what we're looking at here is potentially a rejection. Now, what we see here is that the market does dip its toe below that box, okay? Dips its toe in the pool and says, I don't really like it. It's kind of cold, if you will, and comes right back in and closes. You could jump on it right there and say, yeah, this was a rejection. I'd like to see one more bar of evidence before I would typically jump on something like that. And as it turns out, the next bar is actually what we call a level 1 buying bar, showing that, you know what, the buyers are trying to get something going. So if you wanted to fade it right in here, it's a pretty good scenario, because while this is not necessarily the highest percentage trade, it's a fade. It's a little bit riskier than say what we call a retracement trade. The great thing about this trade is the risk is very tight. You know where you're wrong. You're wrong either right below the low of the day or a couple ticks below. So in this case, you could get away with like a 4 to 5 tick risk. And if you're right, the market should have to higher at least that much and perhaps more. Okay, that's the risk is always the X factor, right? You know that this is not an 80% winner. This is more like a 58% winning trade, but the risk can be so tight at times that it makes good sense. And what do we have going for us? We have the rejection of a selling box, which we talk about right there, in a big picture up market. So you've got 2 of 3 things going in your favor. Not a bad scenario to be taking a trade. Now, until the market proves that it's trending, you want to be thinking point to point. As I said earlier, when the market's quiet, you want to be thinking point to point. Now, we would identify that a market is trending when we start to stack boxes. In other words, if we got another selling box that came in, here, and we got another one there. Now we're in a trend market. Now we want to go for bigger moves. Until we see that, we want to think point to point. So if you're getting long right there, you're probably not wanting to take more out of it than right here. That's our next point higher, the high of that box. Okay, I hope that makes sense. So if you're long right in there, that's okay. You probably want to get out somewhere right in there and just lock in a quick one, just because that's the nature of the market at this time. Okay, so now we get up to the high of the box. What are we looking for right here? Well, if buyers are strong, they're going to be able to break it above. If they're not quite strong enough, then the sellers are going to take another shot down here. And what's going to happen here? If sellers are strong, they're going to take it down there. If they're not quite strong enough, they're going to reject again. We're going to go test here again. Okay, we're in a point-to-point market at this time. There's no trend developing. I hope that makes sense. So now we get some pretty good selling on the way back down. But once again, when we dip our toe in the pool, it doesn't like it that much down there. It comes back and closes back inside of there. So that's not a great sign in terms of, this is an area where we'd expect support. Are the sellers going to be strong enough to break it down there? Well, not yet. We get some more. So now, again, it looks like rejection of the selling box. Once again, now the door is open for buyers to come in. Can they do it? Are they going to be strong enough? As it turns out, they were, and here we get a buying box that forms right above this. So now we've got a couple of things that we want to analyze. We talked about how, one way to get long would be to get long on the rejection or failure of selling box evidence. Well, here would be the rejection of selling box evidence. Now we've got a failure. In other words, the market's trading above this selling box right here. So looking to get long when it retests the high of that selling box is a pretty good one. That would be considered a failure of a selling box in an up market, okay? Now we also at this moment have buying box evidence. We have a buying box that just showed up, this green box. And again, we would expect that the low of a buying box should hold as well. So we've got a couple things going for us here. We could get long based on the failure of the selling box. We could also get long based on the buying box evidence. Regardless, we know that this spot in here is probably a pretty good spot to get long. Even though it's a quiet market, what the nice thing about this is if you get somewhere long in here, you know that you're wrong if we start trading down into here, and it's a very tight risk scenario. Okay, I hope that makes sense. So if we kind of play that forward, we get a decel, we get a level 1 bar, tells us the market should want to move higher. Now it takes forever. It's an incredibly slow market, but it makes it where it should have made it, to the high of the box. And again, in a quiet market, if we're not trending, you need to be thinking point to point. Okay, so you're not going for 10-point moves in a quiet market. If you're going to be getting in right here, you're probably going to want to be getting out right there. These are not huge moves, but that's all the market's offering up right now. Okay, I hope this is making sense. So now we see the market can't quite get there. So now what's going to happen? Well, buyers were not strong enough to get above this box, so now we're going to go test in here again. If buyers are strong, they're going to bump it back to here, and we'll have another test here. If buyers are not strong enough, we're going to go test down to here. We'll have another test right here. But that's the way we think, point to point, when we have a quiet market that is not in a trend type of a mode. So if we play this forward here, what's going to happen? Well, as it turns out, we are not able to hold here. So now, like I said, we are either going to bounce there or we're going to test here. Well, when we test here, we're either going to have sellers that are strong enough or they're not, and they're going to go back to here. And then we're going to either go to here or we're going to go to here. But again, it's point to point, and I hope that makes sense. I think I've probably gone on long enough for this video. This has gone a little longer than I expected, but maybe you have to watch it again to really make sense of this. I'm not sure. I hope this makes sense. But the whole point here is we're trying to – it's not about a trade setup. It's not about the magic indicator. It's not about – everything that most of us learned originally when we started trading. It's about being able to make sense of the market. And if, we kind of play this out, you can kind of see that the market just, once again tested down here, couldn't get acceptance, quickly comes back up. So, that's kind of where we are. What time is it now? It's 3 o'clock Eastern time. So that's kind of where we stand at this moment. But it's about making sense of the market and being able to identify what type of, are we in a volatile trending market? Are we in a choppy quiet market? Okay, how are we going to react to that? Do we have more evidence in our favor or more evidence against us? How are we going to deal with that? When we're in a trade, what are our expectations? Do we expect a big move, or are we trying to think point to point? I hope that, these are the ideas. So that's that for now. If you have any questions, let us know. Talk to you soon.